This is Alan Farley from FX Empire. DocuSign took off in the strong rally starting in March. The company makes a digital signature technology that's become very valuable during the pandemic. The first wave of the rally mounted the 200 level in July and pulled back into this consolidation pattern. In the middle of August, the stock took off in this vertical advance that turned out to be a climax move, almost reaching the 300 level ahead of earnings. Although it posted very strong earnings, a very aggressive sell bid hit the market, and the stock's dropped more than 100 points since that time, completing this 100% retracement into the last rally wave. Now, this is very bearish. I call this a first failure pattern because it's often an early warning of a change in trend. Now, I believe that the stock is going to bounce right around here, and when it gets up above the moving average up here, it's a 50-day moving average, it's going to set off a buy signal that pullback players can use to maybe make a little bit of money. But you're going to have to be very cautious once you get up into over the 220 level. Of course, this exhaustion gap back up here is probably not going to get mounted again. So if the stock turns somewhere in the 220s and comes back down, it has the potential to complete a very bearish head and shoulders pattern that could find its way down to the 200 moving average at around 140. Now, one of the reasons it's so bearish is take a look down here at unbalanced volume. We have this very nice accumulation, and then the bottom just drops out. This is smart money running for their lives out of this position, dropping OBV all the way down to April levels when the stock was trading at about 98 or 100 points lower than it is right now. Now, this is a very stark early warning sign that we'll have to watch as it builds a little bit of buying pressure back up, maybe into October, November, because this line is this accumulation is probably not going to get much beyond about the 50% level before the stock turns lower again. As a result, I think this level right up here is a good place for trapped shareholders to take profits and move to the sidelines, and perhaps some new short sellers to open positions.